Thanks so much for tuning into Talking Point. I'm your host, Neeraj Shah, and the Talking Point today are the views of Milind Karmarkar. There is so much to understand from him about whether the next few months have a different facet of consumption to themselves. That is part one. Part two is the market looking a bit overheated for some of the other sectors that have moved up in the recent past, and his views on whether he believes that the investment theme that is being spoken about for so long, does that come into a bit of a question mark because of what's happened, especially around the election verdict that has happened as well. Milind, great having you. Thanks for taking the time out. I hope all is well. What's the sense about the market for you, Milind? Are you constructive? Are you a bit skeptical because of the valuations?
So frankly, I'm not skeptical at all, because I do believe that we are into a growth cycle, what we saw between 2003 to 2008, because frankly, the circumstances which were there around 2003 and what they are today, 20 years later, are almost identical. And that is the reason why I am extremely bullish on the markets. 1 or 2 months, 3 months here and there, I really don't know. But over a longer period of time, I think we are into a new cycle of growth and therefore a good bull run in the markets.
So I'm understanding that you are long-term constructive and you are not trying to be tactical, even if you believe that there could be some pullbacks, if at all.
Yes. So I am bullish for long term. Shorter term, I'm not taking any immediate cognizance, at least, of what's happening around us, because I think things will settle down and long term looks extremely positive. We had a similar kind of an election between 2003 to 2008, which was, despite that, we did very well during that time. It was only because of the new growth cycle starting.
Okay. Milind, usually, and maybe wrongly, a lot of people associate a lot of consumerism and that theme to Milind Karmarkar. Now, if you're comparing this to 2003 to 2008, sure, consumption may have done well then too, but it was an investment cycle-led growth. It was a capex-led growth.
Absolutely.
And those are the themes that did well. Do you believe an encore is possible?
So, any bull rallies, whether it had, if I go back to 85, because I was there post 85, so no rally is similar. So, it is not led by the same sector again. We had 92, we had commodities and commodified products. In 2000, we had software. Of course, that was more of a speculative boom. But yes, it was a short boom. And as you rightly said, 2003 to 8, the economic growth as well as the markets was driven by the industrials. This time around, I think it will be consumption which will drive the growth, because I see consumption picking up. I'll give you an example. So between 2003 to 2008, our GDP went up by nearly 2.25x per capita GDP. And today we are at $2,200. So if we see the GDP going up from, say, $2,200 to $5,000, then the kind of boom which can come in consumption is phenomenal. Because at $400, the problem was that, there would be nothing for people to consume at around that level. So that is the reason why consumption did not participate as much as industrials. But this time along, we have a decent per capita income, and it's likely to go up significantly going forward. And that is the reason why I think that this time's boom will be driven by consumption.
That's an interesting thesis. Milind, can we elaborate a bit on this? Are there parallels that exist in the other parts of the world? And I'm sure there are, but I don't know if they are comparable. So I'm trying to ask you, are there parallels that exist which show what could possibly happen within the consumption space? Because it's a very wide bucket. To try and hypothesize what could work in India. And part two of my question is, independent of the parallels, what are your thoughts around what will do the more, what will gain the most over the course of this uptake in per capita?
Okay, so if I look at countries around us, whether it's Malaysia, Thailand, Singapore, China, all of them, once they cross the around $2,000 per capita, the move from $2,000 to $6,000 was pretty rapid. So, for example, China was at $2,300, I think, in 2003-4. So, from there, we had seen an amazing growth in China's per capita income and also consumption. Now, while looking at consumption, basically, my view is that it's not only FMCG or retail or things like that, but frankly, even pharmaceuticals is a consumption item. Finance, which could benefit significantly because it also gives a multiplier effect. That also, I believe that that is also should be included in consumption. Insurance, which has not done well at all for last 3-4 years, could again be beneficial of rising per capita income. So across the board, I mean, frankly, there are many sectors which can benefit significantly out of, and that is the reason why I think that it will be a boom which will be driven by consumption.
Okay, this is interesting. Let me try and probe this a bit more. I want to marry the slightly short term and then come to the longer term. So it's the slightly short term. It is obvious, Milind, that, or at least to me, it seems obvious that a rising per capita would not mean that people will consume more of staples. People will brush only as much as they do, or bathe only as much as they do. So the long-term upticks in staples or FMCG may not be as much, but there is an argument being made that in the very short term, because of the Karnataka election verdict, which showed that populism did win, and if indeed the freebie model is to be coming to the fore over the course of the next few state elections as well as May 2024, then staples which have not done well in the last 12 to 18 months might actually have a good run. Now, the short term, Milind, is that argument valid or do you differ?
I would rather, in the shorter term, there is a possibility that staples will do well, but I think it's already there in their prices. So what probably could do well is something related to foods. So that within staples, I think foods will do better than the other FMCG items. That's what I believe. But shorter term is very difficult to predict, Neeraj. So I would rather go for industrials in the shorter term rather than going for staples.
Okay, and just to make it clear for our viewers, by foods, do you mean discretionary food consumption that is done formally, or how are you playing foods, if at all?
It's discretionary foods consumption.
Okay. Now the longer term, and I'll come to industrials as well, because it's the first time that I've heard you say that, hey, I'm looking industrials over food. And I will come to that. But before that, since you invoked the longer term, so I've got one clarity that you are not interested in playing staples in the short term. And by short term, I mean the next 1 year, viewers, because the longer term game is more juicy according to you. Now, Milind, let's talk about the longer term. Discretionary. You mentioned various items come. I would reckon some people have told me real estate also comes because the China model showed that real estate was a big beneficiary, or the property boom that happened in China coincided with this 2,500 to 9,000 per capita rise as well. There is a lot of talk of how discretionary in hotels, QSRs, or urban discretionary largely is also a big beneficiary. Now I'm trying to understand, because there are so many buckets, where is it that from a higher weightage in your portfolios within this consumption basket playing the rise in per capita theme, and where is the lowest weighted?
Okay. Within consumption bracket, FMCG is the lowest weight. And the highest weight, frankly, is financials. And I'll tell you the reason for that. Because for any boom to sustain, whether it is consumption boom or whether it's investment boom, you will require financials. And so good quality financials. And last 2-3 quarters, we have already seen financials, especially financials or banks which are retail centric, delivering a 18 to 20% growth. So I believe that financials will be safer bets within the consumption boom, but the real consumption boom, of course, will be stock picking. Ultimately, it's all about stock picking. So you will have to identify stocks which are within the consumption theme, but at the same time, so-called undiscovered, I would say. Probably you'll make a lot of money there. Like between 2003 to 8, when industrials were booming, everything went up. I mean, some of them went up 40, 60 times. But something like a Crompton Greaves, which was not that great and not so discovered, did very well. So there were others also, like Thermax went up nearly 50, 60 times. So you'll have to look at companies which can do very well and then just stay invested for next 4-5 years.
Okay, interesting. Probing this a bit more. So first,
Yeah.
the first half, which is financials, white bucket, lending financials, non-lending financials. Within lending financials, there is banks as well as NBFCs, and the argument around how a reversal in interest rates might prove more beneficial for NBFCs tactically. So that's part one. And within non-lending, it is distributed very heavily. I mean, AMCs, insurance firms that you mentioned. There's also this whole capital market play that comes into the equation as well. But tell us a bit about how you are viewing this prism.
So I am frankly restricted myself to insurance and financials, but over a longer period of time. So if I go back to 1918 to 1920 to 23, 24 in the United States, that's post the Spanish flu. The biggest beneficiaries were banking, were insurance, and were stockbrokers. I really don't know what will happen in India at the current juncture, but currently we are playing it through financials and insurance. More financials and less insurance. Let me put it.
You mean lending financials like banks and NBFCs?
Yeah, correct.
Okay. Okay, and you're sticking to the larger size, Milind, or are you finding some undiscovered, mid-sized or small cap financials as well?
So we are looking at large financials, but we have also invested in mid cap financials, but I have not gone to a small cap financial.
Okay. Okay. And insurance, so there are limited plays. I'm presuming both life and general would be coming into play here.
That's correct. That's correct.
Got it. Okay. Now,
in fact, frankly, it could also be interesting to look at some of the fintechs, because over a period, fintechs could also do very well. But as of now, there is a lot of chaos in that particular field. So one will have to pick and choose.
Okay. So you are looking at this pond. You are not quite fishing there as yet.
No, as yet, no.
Not as yet. Okay. Now, thanks for that wisdom, Milind. Now, the other part of my question is, where is it that you're finding those relatively less discovered or undiscovered pockets wherein they will gain tremendously from this consumption boost?
So I'll frankly, let me tell you that with the spread of research across the broking community, because 2003 also the number of research outfits were relatively low. Now with so many research outfits already operating in India, finding an undiscovered stock becomes really tough. So the call here is that one will have to look at those companies which can grow significantly, despite currently being valued expensively. But considering the considering the growth opportunity, they are not so expensive. So I would look at those type of stocks.
Okay, they fall in the industrials bucket because that seems primed to be similar to what you're telling me, Milind.
So yes, industrial basket could be something which can be interesting, because like last time when the government gave a big push to power, this time they are giving a big push to railways and power. So there could be opportunities in this sector. We are working on that.
Okay. I think we just, Milind's frame just rotated a bit, unfortunately. So maybe...
I'm sorry.
No,
Let me see if I can do something to it.
Yeah, never mind. We're just waiting for that to happen. But while we are waiting for that, viewers, I think one point, I mean, on industrials, and there are some very interesting conversations that have happened recently on BQ Prime. You might want to tune in for those as well. I mean, we did a very long format interview with him. And on Thursday, we are doing with Thermax. So I think those are things that you watch out for. Lastly, Milind, I heard you mention railways. Now, it's an opportunity that has held a lot of promise all through the years. It just seems that this time around, there are real tangible orders coming in. Some of the stocks have done well, some of the stocks haven't. And some of the larger companies have a railway vertical within. So I'm trying to understand, how are you looking at this railway how are you looking to play this railway theme?
So we are meeting most of the railway companies, and you're right. Some of the large MNCs also have a railway vertical within them. This time around, as you rightly said, that there are large orders both on the wagon side as well as on the train side. So we have these Vande Bharat rakes coming in, which should do very well going forward. And we also have wagon orders which are coming in. So most of these companies are booked for 2-3 years and are likely to do very well. The only issue here is that you will have to see which of these companies actually are able to deliver while maintaining the margins. So that's what we are looking at the current juncture. But yes, the space looks very interesting, and some of them will definitely be winners in this.
Okay. Sounds good. Milind, this was lovely. My final question. So since you saying that some of the industrials or the investment themes also come as a part of the investment cycle. Again, I think we just missed Milind's frame, but be that as it may, since these also come as a part of the investment cycle, safe to say therefore that it is not as if you are choosing consumption over investment or investment over consumption. Investment themes kind of getting subsumed into the whole per capita uptick in consumption story.
Well, let me put it slightly differently. We are overweight on consumption. When I say consumption, I did explain to you that for me, whether it's finance, whether it's pharma, whether it's hospitals, all of this is included. And of course, my favorites, which are retail, all of them are included in consumption. And of course, in addition to that, so if I look at my portfolio, about 70% will be in the themes which I just talked about. And about 20-25% would be in themes which would be predominantly industrials.
Get the drift. Okay. Milind, lovely talking to you as always. Thank you so much for being with us on Talking Point, and looking forward to having more often.
Thank you. See you.
And viewers, thanks for tuning into this edition of The Talk.